For the first time since November of 2016, our clients were net sellers of things. Not just equities, but overall, our clients were net sellers.
By a big margin?
Yeah, a pretty good margin, particularly in equities, even more so than fixed income. And so I think one of the interesting things about this is it shows that although, you know, as the market's at all-time highs, everyone wrings their hands. At the end of the day, it was a really good first half of the year for retail traders. And I think they've gotten to a point where they're like, okay, there is so much on the horizon. Maybe we should take some risk off the table overall. But it's interesting that they didn't go equities right into fixed income, which is the pattern we usually see. We saw sellers of equities not going necessarily into fixed income and sellers of fixed income. So this is a very interesting trend overall. To your point in the introduction, millennials were actually a net buyer of stocks.
What were they buying?
Millennials were actually buying things they know. Tesla. They love Tesla. If Tesla goes under 200. Down to $200, you're going to see millennials buy it. Beyond Meat, Canopy Growth. So, you know, Uber particularly. So one of the interesting things we saw, you know, the IPO came out, the stock went down pretty good in the first 2 weeks of June. Our clients were buyers both of those weeks, particularly led by our millennial clients.
So I was just saying, like, these are riskier names. These are more momentum names. It's kind of surprising.
I agree with you, Morgan, but the one thing I will say is if you look at their parents, what were their parents told? Buy things you know. So if you think about those names, those are names that millennial investors know. Now, to that point, I think you make a great one. I don't know that you want to necessarily hold them forever because not a single one of those companies I named is turning a profit yet. And you want to get to where they are turning a profit. But what is your time frame for holding them? Were you buying Uber just on the thought that, you know, it got a little bit overdone on the downside, or were you saying, hopefully not maybe yet, I don't know, it's the time you want to start building your entire portfolio around it.
Talk to us about Apple and the price sensitivity.
Yeah, absolutely. When Apple touches $200, our clients last month that's when they came out to sell it. If they got near or above $200, and this was across the board, our clients came out to sell Apple overall. I found that very interesting because you and I have talked, you know, every month for quite a while now. Our clients are usually buyers of Apple. It's still the #1 holding at our firm. So I found it very interesting that as it touched 200, maybe with some of the swirl with their design chief, et cetera, people came out and sold it overall, and particularly the last 2 weeks of June is when we saw people start to sell it. One of the other stocks that was interesting on the sell side, I thought, was Netflix. Netflix has been a darling. Netflix was a seller, and again, strong among our millennial investors as a seller, and Disney being a buy. So I don't know if that's giving us a signal perhaps about Disney Plus, but I thought that was also a very interesting relationship.
Apple and Netflix both, I mean, to some degree, range bound, right? I mean, Apple was at 227, you know, the fall of last year. It fell well below that, went up to like 211, fell below it, now up to, you know, so it's had this kind of back and forth, and maybe there's conditioning involved there.
Yeah, absolutely. And a lot of people, to the point of it being the #1 held stock, a lot of people have held it for a long period of time, so seeing people want to take some profits is not necessarily a surprising thing to me.